Here we're going to take a look at using Sage 50. And this is not a detailed video section. We are just kind of quickly going through an example. On your D2L, you have the Sage 50 setup and transactions. Here is a PowerPoint that goes through some things. I would suggest that you look through that PowerPoint. And here is a list of various YouTube links that I have made throughout the years dealing with Sage 50, which formerly was called Peachtree. And you are welcome to look at those. This is a PDF document that goes over making the chart of accounts and putting in beginning balances. If you're looking at the videos and you've got it down, you don't need to look at that. Here is the transactions that we're going to go through in this video called Granite, and you can download those and have them ready to look at. Then I go through 3 videos. First video creates the Granite company and their chart of accounts. And then the setup part 2 goes through setting up the beginning inventory, the beginning vendors, and the beginning customers. And then the third video actually goes through the transactions. There's a lot of detail in these 3, and I'm now going to do a video that cuts that down to a quick skimming through. Alright, so we're going to create a new company. This tells us the information we're going to need. The company name is Granite. And just like you did with QuickBooks, you're going to want to put your initials in front of it. This is a sole proprietor. And we go on to next. We want to build your own chart of accounts and go on to next. And that's accrual and real-time posting, 12 monthly periods. And the first period of the fiscal year, because we're a sole proprietor, we are required to have January, and it tells you this cannot be changed. Okay, and finish. That sets up the shell of the company onto the hard drive. And it takes a minute, and then it'll go into it. Okay, so our first step is to set up our chart of accounts, and if you go into banking, we have the chart of accounts there, and we want to set up a new account. Okay, so the account ID is the account number. Description is the name of the account. Oops, this is checking account. And the account type, there's a variety of types, just like with QuickBooks. So cash is your checking account or any type of bank account. So we leave that as cash. That's the default. Okay, we don't need to put the beginning balance in yet. We can wait until we have all the accounts set up. So I'm going to go up here to the top and say Save and New. Then I'm going to put in the next one, 1100, and that is accounts receivable. And that's an accounts receivable type, just like QuickBooks. It has its own type. We say Save and New. We go to the next one. It's 1200, and that's inventory. That has its own type. These are alphabetically listed. Go down to inventory, Save and new. And we've got 1,500 this equipment. And that's a fixed asset. Okay, then we have 1,501, and that's accumulated depreciation dash equipment, and that is an accumulated depreciation type, and then we have accounts payable. Has its own type, accounts payable, save and new, and we have 4,000, which is sales, our revenue account, which just like QuickBooks, this calls it income, save and new, and 5,000 is cost of goods sold. They have one called cost of sales, which is the same thing. And we got 5,300, and that is purchase discounts. Now, typically purchase discounts is going to go into the inventory account on a perpetual system, but here purchase discounts is actually a contra expense, but there is no contra expense in here, so we'll call it expense. When we put in the beginning balance, though, since this is a contra expense, has an opposite balance, we're going to have to put a minus there. Okay, and we have rent expense. 500 is rent expense. Expense, save and new, and we have 3,000, and that would be, this is Milton Grand Prix is the name of the owner, so MG Capital, and this is where you have to have a retained earnings type. Equity dash retained earnings, and then we can say save, okay, and close, go back into it, view and edit accounts. Here's all of our accounts. Check the account numbers, the names, are they put in there correctly, the types, are they in there correctly, and of course the balance hasn't been put in yet. Okay, so if you wanted to go in to fix one, like this checking account, you just double click on it, it'll bring you right back to where you were, and you can fix whatever you need to fix. Now we don't need to fix it, but we're ready now to put in our beginning balances. So I'm going to click account beginning balances. Now these balances are as of March 31st, okay, and so use the March 1st of 21 through March 31st of 21 and say okay. And we'll put our beginning balances in there. So our checking account is 10,000. Notice that the white box for all of these assets is on the asset side, on the debit side, and we have boxes down here for liabilities on the credit side. Okay, accounts receivable is 4,000, and inventory is 14, and equipment is 50. Now, unlike QuickBooks, accumulated depreciation has its own type, so we don't have to put a minus there. It already knows it's an opposite balance. 23,000. Accounts payable. It's a liability. And the retained earnings is 32,000. Okay. Sales is 50,000. That's a revenue. And we have cost of goods sold is an expense. That's 35,000. And we have purchase discounts. Now this is the one that's the contra expense. So it's sitting on a debit side because it thinks it's an expense, because that's what we put in, that this is an expense. But it's actually a contra expense. So we're going to have to put a minus. And that is 1,000. And then our rent expense is 3,000. And that's it. Okay, so we want the trial balance here. Our total debit's 115, our total credit's 115. Trial balance is 0. And it tells you if there is a difference and you go ahead and say okay, that difference is going to go to beginning balance equity, just like with QuickBooks. So then I know that you didn't put stuff in right. Okay, but in our case, our trial balance difference is 0. That's what we want. Okay, and so we say okay. All right. Now, the next thing is to set up inventory, vendors, and customers. And I will go into a part 2 to do that.